Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for a market recap. All right, guys, we're just going to hop around into the charts. It's been a while since we've done a recap. Let's just start off with the dollar like we usually do. So looking at dollar, we're still trading in this range. So we've been in this range for about going on 19 months, give or take. So it's almost 2 years, guys, since we've come down into the blue zone back in February 2023. And then we've over time made a range. Now we did mature out to make a clearly the low of the range and then the high of the range, which is right here, which is in between these monthly bullish fair value gaps and then the monthly bearish fair value gap. And then we have the blue zone that's overlapping, and this blue zone has been around since the 70s, guys. So this blue zone has acted as whatever terminology you want to use, supply and demand, accumulation, distribution, whatever. It's acted as a price point of interaction. And in this scenario where we've been, it's been a relative area of demand. As you can see, as we've come into it towards the lows of it, we've found demand, and we've been relatively staying above it for these last 19 months, give or take. Now, what's important now is what is Dixie going to do now? So we are on the precipice of a Federal Reserve rate cut coming in September here. So what is likely going to happen now? So, pre-rate cut, just looking at the chart here, I do see that we've made a lower low for the first time in a long time, right? So we've made a lower low from here to here, and that's fairly significant because after this nice little trending move down here on the daily, we can use this high here, right here, at about 106.13 that led to that lower low, and we'll connect a fib from that high to the lower low here, okay? And the most common retracement we can expect is about that 50 percentile retracement. So we can see dollar potentially get to about 103.284, and then we could see a decision, right? Are we going to continue higher, or are we going to roll over and either make another higher low or actually continue down to make another lower low and challenge the range low, which is about 99.578. So we've actually still protected the lowest low point, and that's important because that means the nature here hasn't really changed. In spite of taking out this low here and leading toward the lower low here, we haven't changed the nature of the range. We are still decisively, clearly in the range. So not much has actually happened. But we know that we have these rate cuts that are on the way. And the rate cuts, standard thought would tell you that, hey, more dollars means we should see a push down because an increase of supply is coming, right? And that will probably be the case, at least in the short term. So if we do make a move up to this area here, I do think it will be a pretty aggressive move, and it'll happen within the first week, give or take, of September. And we will get there, and then we get rate cuts. Now, if we don't get there before rate cuts happen, then there's a lower likelihood that we'll get there at all, and there's a higher likelihood we're actually going to take out the low of the range and make our way to this monthly bearish fair value gap right down here at 97.7 towards the low, and towards the high of it being 98.3. Now, with a rate cut, you don't want to project specific levels or zones to hold. We really don't know how impulsive things are going to be, but what we can project is that will this range break? If we don't get up to this 50 percentile level before the Fed rate cuts happen, the probability of the range breaking to the downside is very, very, very high, okay? Very high. If we get to this area before the rate cut happens, there's still a very good likelihood we'll break the lows of the range, but it's less likely, okay? It's pretty simple. Now, there's another piece of confluence here that tells us that we might have some trouble getting to the 103.284 level, which I do think getting to 103.284 is still the most likely thing we're going to do. But here's some confluence to show us that that might not happen. We go from the lowest level on the range, right? And then we connect it to the lowest low that just got taken out, or I should say the higher low right here. We have some potential price interaction here that might cause some issues at 102.15, where you'll see price get to this and it may slow us down, right? And if we do slow down here enough and we don't actually get enough demand to get through and we start to kind of waffle here and consolidate on the precipice of the rate cuts, that may, again, that will likely lead towards a breakdown to take out these lows. Now, it doesn't mean we're just going to dump all the way down to sub 90 or whatever. We could easily do this and then rebound back up, because remember, rate cuts, the event is very volatile, but the feeling of it, the feeling of the supply increasing takes time. It's going to probably take at least a quarter, maybe 2 quarters, but it'll take time. Not to mention, there is a lot of foreign demand for dollar. Right? There's a ton of foreign demand for dollar, and I do think that's not going to change, especially if we continue to have the conflicts that we're having in the world. And yeah, give or take. So just keep your eye on dollar, but most likely path, in my opinion, is a move to the 50 percentile retracement of 103.284. But if we fail to get through this area here at about 102.2, 102.33, then as we get closer to the rate cuts, it gets way less likely to get to 103.284. All right, let's head over to the Dow. We'll take a look at that. We'll go through the U.S. indexes now. So things have been pretty interesting for the Dow. Dow's been very, very bullish, guys. Very powerful. Had a really strong close on the monthly. So let's go over to the monthly chart here. So looking at the monthly, notice this candle that we closed here. Very strong. We had sold down, and a lot of people were quite bearish at this point. And rightly so, right? It looked like we were topping out. We had another bearish engulfing after a previous bearish engulfing. And then as we came into the close of the month, we had a very powerful whipsaw up, very strong buy up, which I would actually say this is probably a bit of a bear trap. A lot of bears are probably on the wrong side of this move on the month. And not only did we close this bullish, we even conquered the previous month high. And that's actually a really big deal, because that implies continuation. It implies that the trend is continuing. And after this consolidation on the monthly, after this pullback and inside bars on this bearish candle, we're not overextended at all. So it's quite healthy right now, the trend for the Dow. Now, if we go down to the daily time frame, there are some things I want to talk about with this that tell me to be on the lookout. Things could definitely slow down without much issue, for sure. We are not, exploding higher, right? Like, we're not having this move here where we're just trending higher. We are getting a lot of resting periods where we'll move up and trade sideways, and then slight move up, trade sideways. So we're not really, exploding higher at this time. What I will say is, I do think that our nature right now on the Dow is bullish, but we want to keep our eyes open for that nature to change. So let's actually draw this trend line here. So if we look at this trend line right here, so we go from this high to these highs here and pull forward into the future, you can see that the Dow still looks great, but we do have a bit of a moving ceiling ahead of us. All right. So notice that this trend line here, I believe, will play a role in the future for the Dow for a long time. So we look at the daily, like you can see, there's a lot of room to get there, but to move towards about 46 to 46.8, it depends on how fast or slow we get there. Okay, but we will likely have a move higher towards this trend line here, and once we get there, expect some selling. Now, this is important. Okay, this is important for a couple reasons. Now, I have a theory. Now, it's just my theory that the U.S. equities, the U.S. index markets will go up for about what we have about 1.5 years, 2 years. I do think we'll be going up until nearing the end of 2026, and then once we get towards that time period, we'll probably start to show major signs of a massive debt crisis. A massive debt crisis. It's my theory that the debt bubble will start to burst in early 2027, and then the rest of the world will start to really feel it middle to the end of 2027. But the first signs will be in the equity markets, as it usually is. But before then, we're likely going to continue higher and really test this structure again. And it's important we do that, because if we do that and we kind of don't explode from the rate cuts, but we're just consistently going up. As we come in towards the end of 2026 and we're still grinding higher, we start to create a structure that is rising, right? We're creating this rising, grinding structure, and that usually is a sign of bearishness. It's usually a sign that smart money is letting go of their positions and that they're slowly exiting the market, and they're expecting for prices to correct themselves and then to try and buy things at a correct price or a cheaper price, etc. Right? So it always goes back to auction theory. When you want to buy something, you want to try to buy it at the best price, and then when you're trying to sell something, it's the same thing. You're trying to sell at the best price, so that means you want to sell higher. And we're starting to see that evidence, right? Most famously, we're watching Berkshire Hathaway, Warren Buffett let go of his positions. But these things take time. These are slow-moving processes because these entities are really, really, really big, right? So they're going to make sure that they don't just dump and dump before they've gotten most of the skin, most of their skin out of the game. So they're going to be strategically letting go of positions, but also letting the price in the markets go up too, because they want to make sure that there's enough retail getting into the market, so they can slowly let go of their bags. And this to me is a technical evidence, or technical speculation of what I'm talking about. As we get towards the end of 2026, we're going to make higher highs and higher highs, but it's going to be far less impulsive, in my opinion, in spite of the rate cuts. Now, if let's just say the rate cuts lead towards us waking up one day and the Dow just does this, then we'll adjust, and that's fine. If you're bullish, you're bullish. That's good. But I do think this nature will return, right? So you'll do something like this, and then you'll still grind higher over time. I just don't know where. Right now, this is where it looks like it's happening. So we'll keep our eye on this. And remember, this is the monthly chart. So this is going to take a while, 3, 6, 9 months, give or take. But this looks very, very bullish short term on the monthly. Again, short term on the monthly, we're talking like 3 to 9 months, and maybe even a little bit longer. But as we start to show signs of weakening out and breaking this structure bearish, then be prepared, because it's going to be a very, very tough time in many markets. All right, but Dow looks great. I can see a pullback coming next week, and if we do pull back next week, look for move back to about 39,672. But again, we close that monthly very strong, so there's a really good chance we have an impulsive move for most of September. All right. Next is the S&P, and the S&P, unlike the Dow, did not take out its monthly high, but that's not unexpected. Both the S&P and the NASDAQ will ultimately follow the Dow. The Dow does run the show. The S&P may hold the most important companies in the world, but the Dow runs the show. And if the Dow continues higher, you can safely bet so will the NASDAQ and so will the S&P. But if the NASDAQ and the S&P have not taken out their highs and the Dow has, and it pulls back, as long as the Dow holds a bullish bias, a bullish structure, the S&P and NASDAQ will do the same. Notice that we've had this move up here, beautiful move up, and then we start to consolidate here on the S&P. Well, if we continue this consolidation while the Dow pulls back, and we generally hold this structure or create more of like a grinding structure down like this, where it shows signs of accumulation, okay, where it's showing signs of accumulation, that this will ultimately still lead towards the breakout of the S&P's monthly high. So it's still very bullish. Now, if we correct on the Dow, you'll see the correction on the S&P. First place I'm going to be looking for is about 53.48, give or take, and then towards the lows of this consolidation right over here, which is around the highs of this consolidation here, which is about 52.24. So I do think that we'll likely see this low hold. Now, if we were to get down to here in this area, that doesn't mean that we're going to hold this and then take out the highs. That actually creates structurally a much more bearish looking structure. So we'll have to wait and see what happens. There's no point projecting what price is going to do from here. But this would be the first area I would look for price to pop from, and then I would see how it pops to determine what my bias should be, whether or not we're going to take out this low or not. And the probabilities would be quite high that we would. Okay. Next is the Nasdaq. So unlike the S&P, Nasdaq actually on the monthly close is somewhat bearish. Not completely bearish. It's not like, oh my gosh, it's horribly bearish. But of the three, definitely the most bearish. Now, that's not surprising with the Nasdaq because Nasdaq's nature, it overshoots on everything. It overshoots to the upside and overshoots to the downside, especially compared to the Dow and the S&P. Okay, that's just the nature of the Nasdaq. But if you look at it just structurally on the daily, even though it's the farthest away from its previous monthly high, it's very similar to the S&P. Nice move up. And then this is also showing signs that it may even grind lower, grind to the side, kind of like this. Again, squeezing and then showing signs of accumulation, right? That's what you want to see. And as long as you see that, in spite of a Dow pullback, you're likely going to get a Dow continuation higher, and then you'll see both the Nasdaq and the S&P take out the highs, and that's the most probable path. Now, if we do pull back on everything, Nasdaq will as well. Where will it get to? Well, the first major area would be about 18,450. So towards the top side of this consolidation, and then if we were to take that out, we would probably sweep out these lows pretty quickly. Where we're probably going to come right down to these lows and come down to 17,000. So there's a good chance that could happen. But if the Dow holds structure or continues higher, you'll just see the Nasdaq make its way going up. All right, next is oil. So we'll talk about oil real quick. Oil, there's actually not much to say. There's more to say about oil on the fundamentals, like what's happening in the world. But on the chart, not so much. So the chart's in this squeezing structure. It's been in here for a long, long time, as you can see. So you see this pivot here to this pivot here. You see the squeezing, lower highs, and then this lower low pivot all the way up here to these higher lows. Again, squeezing, right? And we're nearing the end, right? Right now we're trading towards the lows of this symmetrical triangle structure. So that would imply that we're probably going to break down. Now there's some fundamental analysis that could tell us why it would break down. There's a lot of reasons why it could, but there's just as many reasons why it could break up. Reasons why it could break down. We're in an election year in the U.S. Usually, they try to get oil prices as low as possible during that time. That's just good politics. So there's a really good chance that price will just go down. They'll do their best to get price down during that time. And if we were to break down, from here, we're probably going to take out the structure pretty decisively. First level is going to be this area here. So pretty much where all the pivots are kind of formulating here. So right here at about 67 to this low pivot here at about 67.74. So this general area. And then if we don't show demand there, we'll come all the way back down towards the lows of the blue zone, which similar to the dollar. This is a zone that's been around for a long time for oil. It's acted as accumulation, demand. It's acted as supply or distribution. It's acted in many different ways throughout the lifespan of U.S. oil. But right now it's been acting as a demand zone. So if we come down towards the lows, there's a really good chance that we'll see demand flow into oil and probably be a great place to maybe take a long position on oil. We would likely sweep under this low here. So taking out 63.68 and actually tapping into 62.56. Now, if we were to break up here, right? So if we were to hold this structure at the lows here and then break up to take out the highs, the fundamentals of that is unfortunately the conflicts are still persisting, right? The Ukraine-Russia conflicts, the Gaza, Palestinian, Israel conflicts, also the Iranian-Israel conflicts. These are all persisting. And if those conflicts don't show any signs of slowing down, which they haven't thus far, they've actually only shown signs of potentially getting worse, then oil eventually is just gonna react to it, right? And a breakup from here would mean that we're likely going to conquer these pivots for sure. We'll get up towards this origin pivot of the squeezing structure, which is about 94.67. And then from there, there's a really good chance you can see a slowdown happening, right? So you'll see a slowdown happening here, but most likely you'll get a higher low that will ultimately end to a move post 100, right? So you'll see a move going up towards 105, 106, and if it gets really, really bad, maybe 111, 112. And then, I would expect as you get closer to 100 or slightly trade above 100, you're going to get a lot of market participants, out of Saudi, maybe the U.S., that are going to do their best to start intervening on the oil price. and trying to get it back down lower to probably at least back towards the 90s. Okay, so a breakup from here is definitely in the cards. Nothing's really changed with oil. Everything's relatively the same, but we are coming to a decision point soon. Okay. Ultimately, though, I don't really see us breaking lower than 62. There's a chance, of course, always a chance, but I don't see that happening right now. At least not with everything that's happening in the world. All right, let's go over to gold and silver. So we'll start off with gold, and I gotta say, gold's been doing its job. It's been doing great. As the a lot of uncertainty in the world, with increasing inflation, gold's been going up, and it's been very, very decisive. Now, I do think that it's going to come down here. That's not a bad thing. Gold's been going up a lot, so I do think we're going to see a bit of a correction on gold here. And let's just connect. Let's start connecting the highs here. So if we connect this high to this high right here, you can see that, again, it doesn't have to be perfect, but you get the general gist of it all, right? So just do multiple trend lines, mess around. Nothing needs to be clean, but here you go. So you're seeing a lot of evidence here that we're likely going to kind of make our way down, and at the very best, make a higher low, okay? So if we make a higher low from this low here, like this, what you're getting at here is signs of a tightening structure, okay? You're getting signs of a tightening structure, which tends to be bearish in this context where you've moved up and then you're showing signs of a slow distribution to the upside, right? Okay, so you're showing these signs where you're squeezing, making slight higher highs, slight higher lows, and then finally it breaks down. That's usually what you see when you're getting smart money slowly exiting a position. All right, and if it does break down, if this does validate, where can we get to next? Well, firstly, we're also in this potential megaphone structure here. So this would be the first place you would see price want to get to, where pretty much if we did something like this and we break down, you're going to see us get to this area here. And ultimately, this also implies that this will probably break down too. This doesn't imply that we're going to actually stay relatively bullish or anything on gold. So ultimately, I do foresee gold making its way back down towards 2163 or 2154, I should say, to about 2187. Now I'm going to give a caveat as to why this may not happen, okay, or it may take a lot longer than we all think it will. Rate cuts. So rate cuts are right around the corner, right, guys? So if the Fed is cutting rates, you would expect that gold should go up because, well, more dollars. Right, so that should lead towards gold appreciation against the dollar, and you're correct. However, it's not immediate. So like I've said, these things are not immediate. We can project it, but the actual feeling on the economy takes some time. So it could be a kind of a quarter basis, maybe a 2-quarter basis, where it could be 3 to 6 months. But when a rate cut happens, you will get some. You'll get some volatility, and in this case, you might get some volatility to the upside, but ultimately, you'll get the markets to kind of come back a bit and kind of correct itself for a little bit, and then once you start to get those waves of supply coming into the economy where it's clearly felt, you'll likely see gold start to actually go up quite dramatically over time. But it's usually not an immediate effect. But hey, this could be different, right? So the first place I would look for after breaking these structures, it would be this small consolidation here. That depending on the power of gold and of the environment of how risk on it is, I would expect that we hold this unless things get really, really dicey, especially with the conflicts I previously mentioned. Then we could definitely see a move back to 2000 and maybe even sub 2000, challenging the lows of this consolidation here, which is about 1985. I don't foresee that. I think that's very unlikely, but it is in the ballpark. I think what's most likely is we'll take out this rising trend line here. We'll break this bearish, and then we'll come back to the lows of this rising megaphone-like structure, and we actually may hold this. I think we'll trade slightly under it and then make our way back into it. That's just my projection. again, it's a projection. My projections are wrong all the time. You always want to trade what's in front of you in the chart, and right now what's in front of us is, it looks slightly bearish. Right? It looks like we're reversing, but keep in mind, rate cuts, we're on the precipice, and things can change on a dime. All right, next is silver. So let's take a quick look at silver, and unlike gold, has not really rallied up nearly as much. But what's interesting about silver, it's a lot more bearish in my opinion, because you're seeing, look at the highs here, right? So you have this high right here, this high pivot, and let's connect it to this pivot right here. Okay, so you're descending clearly, but notice the rate of descension is increasing. So you have this high to this high. So see how much more steep this is getting. So this is not showing signs of an accumulation or demand yet. There's small signs of demand, but nothing big. And you can see it from the lows as well. Look how steep these lows are. Okay, there's not a lot of demand here. We need more evidence to see that maybe things can shallow out, even out, before I start to feel like, oh, you know, maybe there's demand coming in here. But right now we're not seeing it. Okay, we're not seeing anything like this where you're getting, you know, slight lower lows or slight higher lows, right? Where you can see it clearly rounding out. That's not happening yet. Okay, so it's pretty early. Now, if we continue on this rate of decline, we're ultimately going to get back towards this range, this consolidation here. And this is pretty interesting because this range, we have the clear high-low points of it. And we can see that if we come into something like this, it's very likely we're going to come right into the middle of it. So we can connect the low of that range to the high of it right here. And that is right here at the 50 percentile. So that's about 23.159. So there's a good chance, since I do think gold's going to pull back, silver will pull back as well. But unlike gold, it's far more impulsive to the downside. At least that's how it looks right now. That's how it's going to be. So in that scenario, I do think that there's a really good chance we actually come all the way back down to 23.159, which is the middle of the range. And as long as gold holds relatively bullish, right, the levels we went over, it holds, I do expect silver to hold this low as well. This low is key for it to hold. If it were to lose this low at 20.696, actually it turns out to be really, really, really bearish for silver. I would still start to look for an upside move after taking out this low, but I would look for a lower high, a major lower high, and I would expect for us to go even lower, to come and challenge these lows. So I think it's really, as of right now, fairly unlikely that we come down to here, but I actually do think it's quite likely we do get to the 50 percentile retracement. If silver was going to be staying really, really strong, where all it needed was to maybe sweep this low here and sweep this low here, could come to the actual pivot point that is 25.914. But that's always a possibility. But I would be looking more towards the middle zone of this range for price to get to. It looks really, really likely as of right now. But again, silver will follow gold even if silver is stunted, which it has been. All right, so let's go over to Bitcoin. We'll take a look at the Bitcoin chart. I might do a clean Bitcoin chart because I have mine. It has the levels I want to talk about, but it is quite messy. There's a lot of stuff on my chart. As you can see, I'm still in a long right now, slightly in the money. I'll come back to this chart, but let's go to a clean one first so we can talk about immediate price action. Bitcoin, this is one of the reasons why I haven't done a actual recap in a while. There's just not much to say about Bitcoin. So as you can see, we're in a megaphone-like structure with Bitcoin as well. But we're trading right in the middle of it for now. That might change, right? Maybe we're going to trade down and come back to the lows of the structure. That's always a possibility, which would be, depending how fast or slow it moves, that could be anywhere between 50,000 to maybe even sub 50,000, coming into like the 49s or mid 49s. You never know. But as of right now, we're in the middle of it. There's not much price action here to tell me what I should be expecting. It's quite in this area where we're at right now. If I go to like the 4 hour, this is fairly neutral to me right now. Like, we've broken structure here, we've come down, but this consolidation right here, as long as we continue to hold this nature where we just continue to make lower high and then lower lows like this, okay, depending on how tight that is, it's just going to tell me to look for another short-term move to the upside, and then we'll probably get another short-term move to the downside, so something like this, and then another thing like this. We're right in the middle of this structure. There's really no action. It's not no action unless you're trading like smaller time frames. There's nothing wrong with that. So my point of view is I find Bitcoin, I find crypto in general be very interesting on a macro view, because Bitcoin hasn't taken out anything, right? We're still in an uptrend. Nothing's really changed. Still in the structure. What's changed a lot is altcoins, right? So altcoins, a lot of the altcoins have taken out key levels where a lot of them are in bear markets. A lot of them are taking out their all-time lows. A lot have taken out their uptrends. So altcoins are what have changed quite a bit, but Bitcoin, in spite of all that, hasn't done anything. So there's really not much direction I can glean from Bitcoin short term. Now, long term, I have to have bias of bullishness for a bunch of reasons. Fundamentals, everything that you would want for Bitcoin to be happening is happening. Rate cuts, all these things, wars, all that stuff. That's all not bad for Bitcoin. Also, technically, I mean, again, uptrend is still alive, still in a structure. Nothing's changed. So, Bitcoin is pretty sound right now. What's the only negative I could say about Bitcoin has to deal with the market cap. Now, I'll talk about that in a second, but I do want to touch on my chart here. So let's go back to my chart with all my lines and stuff on it real quick. Here we go. So, right now we're trading at this Bolo line, which is, I guess, just be on the lookout. It's just a line, like I look for lines like these that come from other times in the market. So I call them other markets, right? So this was during the market of 2022, right? And I like to see how price interacts with that into the past and future. And as you can see, this line has played a role. It's played a role in price action. As you can see, that's what's happening now, right? We've been oscillating around it for a while. It's still playing a role, and I foresee that it will continue to. And also, if we go to the weekly time frame, you see this purple circled area here. That's actually circling this weekly doji, and it's a key area, right? I had drawn this line a long time ago. 64,543 is key, right? Anytime you have a doji that creates the consolidation, it creates the structure. It's super important. Dojis are very underestimated in markets. They're like magnets. But there are some dojis far more important than others. Ones that actually are the origin point of a consolidation or a structure are massively important. Their low and high is massively important. And this low, as you can see, has played a major role as essentially, as in this case, as a resistance zone, if you want to call it, or a supply zone, whatever terminology you want. I don't really care. We've had perfect testing of it, both up and down. And most recently, we had a test as resistance, and it respected it dramatically. Now, it doesn't mean it's meant to hold as this zone forever. That's not what I mean at all. But it is a key point, because this is what you want to see to get evidence that there's going to be a character change inside of the structure, right? So we've made lower lows throughout this entire structure, and then we finally, during August 5th, had a major move down, right? We had this big old move down, big wick down. And now the key is, will this wick that is the lowest low point play as the beginning of a change of character that leads to a higher low? So if we get a higher low that shows up here, 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 or even right here, at any point, right? If you get a higher low that starts to show up before taking out that low, and then we conquer this high, or essentially the low end of that weekly doji candle, then there's a very good sign. Not only are we going to test the highs of the structure again, but you're probably going to show signs of a breakout coming that leads to a continuation from here, consolidation from here, or a pullback from here that leads to another higher low that then leads to a breakout again. Okay, so right now I have to be somewhat bullish in here, because I have evidence that all we need is a higher low. Once you get that higher low from here, there's a good chance we're going to test the top of the structure again. Okay, that's what I'm seeing inside of here, but we're nowhere near that point yet. It's a very big structure. It's very slow moving. If you look on the weekly here, it's nowhere near done yet. Okay, and we don't know if that's what's going to happen. It's still unconfirmed. But this was the first thing we wanted to see. was a big move down and then an aggressive move up. All right. Now let me get into something that's really bearish. So if you're bearish, you'll like this, but you have to be careful, right? So if you're bearish but you like Bitcoin or you like crypto, you have to be careful. If you don't like crypto and you don't like Bitcoin and you're bearish, you're going to love this. Okay. So let's go to the total market cap. So this is the market cap of crypto, including Bitcoin. So this is really, really bearish. Okay. It's not the end of the world just yet, but this is bad. So we're going to go back and forth between this chart and the Bitcoin chart. As you can see, I have marked the high, the all-time high of the total market cap, which is about 3 trillion. Okay. What's concerning about this is that Bitcoin made an all-time high, but the market cap did not actually succeed in making highs itself. That's a bad sign because that implies there's no money that's come in, no new money or no significant money that's come in to push price beyond the previous market's high. That's a very, very bad sign. Now, it's not the end of the world because, well, Bitcoin, like I said, is still in an uptrend. Nothing's really changed with it. It's still in that structure, okay? We have also a lot of fundamental variables that are on our side for now. So it's nothing to be too worried about. This is why I'll tell you when to worry. If we do not take out this high, but Bitcoin comes and takes out this low here at 38,524, this protected low. This is the low that is the protected low on this uptrend here. If we take this low out before the market cap can make a new high, and because Bitcoin has halved already, that is a massive, massive red flag. And I don't mean a red flag where, oh, you know, we're going to go into a bear market. No, I mean an existential crisis for the existence of Bitcoin. I'll explain why. Bitcoin's thesis of existence right now is that it's digital gold, that it's a reserve asset, and that supply is being cut every 4 years by half. And we've gone through that supply cut. We have an environment where high inflation persists and is going to increase. We also have a environment of uncertainty because of global conflict on almost, if not, yeah, every continent, South America, Europe, Asia, everywhere, outside of Antarctica, okay? Every conflict is on every piece of land in this world right now. Gold has also shown signs of doing its job. If Bitcoin can't follow, if Bitcoin can't prove its thesis, its existence in this environment, there is no environment for it to do it. And that is a huge red flag, and it would essentially mean that it's going to fail. Okay, now nothing's set in stone, but that's a really, really bad sign. So if you like crypto, I promise you, if we take out this low, especially because the halving already happened while in this environment, and the market cap high wasn't taken out, it is probably over. Okay, it is probably over for most, if not all, crypto. Okay, because I can't put into words how bad this would be. Now, if we take out this high first and then Bitcoin comes down, that's okay. That's okay, because then, okay, Bitcoin's going to go into a corrective state or a bear market. That's okay. Those things happen. But if you don't get more money in before that, that's really bad because it just shows that demand is not there. Demand is not there, but there's demand for another asset that does its job. So this is a very important time. So if you're bearish on Bitcoin, there's nothing wrong with that, but be careful what you wish for, because I promise you, the probabilities increase astronomically for a death of Bitcoin. And if Bitcoin dies, I promise your altcoin's going to die. I promise. Because if you look at how reserves work in crypto, most reserves are in Tether. And if you look at how Tether's structured, most of its reserves are in debt and investing in Bitcoin. Okay? It's like Terra Luna on steroids. And if Tether goes down, people have this weird idea that everyone will buy Bitcoin. You won't be able to, because the majority of exchanges will cease to work. They will cease to work with very few exceptions. And the only exceptions that I can think of on the top of my head is something like Coinbase or Kraken. And if you look at the history of Coinbase and Kraken, I'm not kidding, they suck. Coinbase goes down if Bitcoin goes up 5% in a day. What do you think it will do in an environment like that? You think Coinbase is going to be operational? Absolutely not, right? So you got to be very, very careful with what you're asking for realistically. So this is another reason why I'm also bullish on Bitcoin, because realistically, there's going to be a ton of demand pre 38,524. A ton of demand, a massive amount of demand, at least until that market cap makes a new high. Okay, once that market cap makes a new high, then hey, Bitcoin can come all the way down, and not kidding, all the way down to like 12,000. It won't be a big deal. Back to 15 wouldn't be a big deal. Be crazy. I mean, be in a crazy bear market, but it would still be in a living cycle, if that's the way to put it. The cycle will be living. All right. If we take this out before that happens, the cycle is dying at that point. The asset is dying at that point. Okay. It doesn't mean it immediately falls to zero. It means that over the next 10 years, you will look at Bitcoin as a Napster. It will not a LimeWire. It will not be around. And the way crypto is currently structured, that means everything, most things. There will be very few exceptions, and you can investigate to see what those exceptions will be. But there will be very, 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 very few exceptions. So just keep that in mind, okay? But overall, right now, structurally, nothing's really changed with crypto, with Bitcoin per se. With crypto, if you're bullish on Bitcoin, I think this is a great opportunity to buy altcoins. If you believe that Bitcoin is going to go higher over time, the altcoins are at extremely cheap price relative to the rest of the U.S. market and also Bitcoin. All right, guys, that's it for now. I'll do another recap soon. But yeah, just want to get this out because things have changed enough. And yeah, so if you agree with anything I said or you disagree with what I said, please, please, please make sure to leave a comment down below. If you want to talk to me more or you want to join my community, you can find the link to the Discord down below. The Discord is totally free. I do sell premium services like, just mainly day trade room. I do tutoring sessions if you're interested. Right now, I don't have anyone I'm tutoring. And I also have a swing trade service. So if you're interested in any of that, you'll find the links down below for the Patreon and the Discord where there's more info on those services. All right, guys, that's it. Everyone, make sure to remember, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.